Hello everyone, good morning, good afternoon, good evening, depending upon when you're watching this video lecture. Some of the questions which were given to you in task 4, some of the students have raised certain doubts in that. Let me just address them. Of course, this task 4 consists of majorly the perquisites related provisions applications. And here in the first question, it is asked to compute the taxable value of the accommodation. That's all, nothing else. That means only the perquisite value needs to be calculated. When this is asked, that only has to be calculated. You don't need to compute the salary, gross or net, doesn't matter. But you don't need to compute the total salary. You have to compute taxable value of accommodation. Means perquisite valuation only has to be done. Of course, in two different scenarios. First case when the employer owns such accommodation, and second case when the employer hires such accommodation at a monthly rent of 900 rupees. Of course, we should know the provision for valuation of perquisites. If the accommodation is owned by the employer, we have to look at the population of the city also. In this case, the rent-free accommodation is provided in Mumbai, which is definitely going to have a population of more than 25 lakhs. So naturally, 15% of salary will be the value of perquisite. Whether the employer owns the accommodation or hires the accommodation, one thing for sure, for perquisite valuation in respect of rent-free accommodation is computation of salary for this purpose. That is a core thing. What is the salary here? That definition has to be absolutely known, and we should identify whether these items given here are included in that or not. Basic salary, of course, included. Entertainment allowance, definitely included because it is fully taxable. Education allowance, he has 3 children, so exemption might be available. Only the taxable portion of that will be included. DA will be included, but for that we need to look at whether it forms part of salary or not, which is given here very clearly. 60% of DA only forms part of retirement benefits, which means 1800 per month only will be included for the purpose of this calculation of salary, for the purpose of RFA, rent-free accommodation. Fees definitely to be included, bonus to be included, but professional tax of employee paid by employer, it is a perquisite. And what is the nature of this? Obligation of employee met by employer. Definitely it is taxable, but are we worried about taxability here? No, that is not the point at all. We are worried about what is salary for this purpose. Will perquisites be included while computing the salary for the purpose of rent-free accommodation? No, definitely not. So this need not be and should not be included. All the remaining things will be included as taken here also. Simply, what is salary for the purpose of this is basic salary, that is included. Bonus, of course. Fees, yes. Allowances, in that for dearness allowance, only 60% is included, since that is only forming part of retirement benefits. Entertainment allowance is fully included. Education allowance, to the extent of exemption available, it has to be deducted. How much exemption is available? 100 rupees per month per child, up to a maximum of 2 children. So though he has 3 children here, it doesn't matter. He'll be eligible for 100 into 2, 200 only, which means 2400 can be claimed as exemption. To that extent, if you reduce, remaining taxable amount of allowance will be also included for the purpose of salary. So this is the total of allowances. Do we need to do this segregation allowances, etc.? Not required. No need of a separate column. This also, this can be just ignored. Straight away, these amounts can be written here. But point is, you have to show the computation of salary very clearly and show the total of what is salary for the purpose of valuation of rent-free accommodation. And as I already told, professional tax here paid by employer on behalf of employee is a perquisite, so it should not be included here. Very clearly, it has to be known and noted and applied. Now we have this salary, total of 1,12,200. Simply, there are two cases. First case, if the accommodation is owned by employer, 15% of salary. So 15% of how much? 1,12,200. That has to be calculated. 15% of 1,12,200 will be 16,830. If the accommodation is hired by employer, either 15% or actual rent paid, whichever is lower. 15% already we know 16,830. Actual rent paid by the employer was 900 rupees per month. So 900 per month means annually it will be 10,800, which is lower in this case. 10,800 is lower. So that will be the taxable value of perquisite. That's it. So here to be noted, main point is, in case the accommodation is owned by the employer, then we have to look at the city. In case accommodation is hired by the employer, there is no need to look at the city or population of the city. It doesn't matter. Simply 15% or actual rent, whichever is lower, will be the value of perquisite. In this case, since city is clearly given in the question as Mumbai, that much we should know. Definitely Mumbai population is more than 25 lakhs. So 15% of salary directly can be taken. For that, a note can be written also. That will be part of the working notes. Like this. First question is about only computation of perquisite. Second question is asking to compute gross taxable salary. See, when we say gross, that is nothing but before standard deduction and all. So that is not having deductions under section 16. Prior to that, whatever it is, that is gross taxable salary. What is asked, that only we have to compute. So what all things will be there here? Everything given in the details has to be included as part of the gross taxable salary. The presentation has to be always clear. When the main question is asking gross taxable salary, we have to put a heading statement showing computation of gross taxable salary of whoever the SSC is. For the assessment year, clearly it should be written. This heading is also important. We should clearly write that. Then particulars, amount, outer column, inner column can be shown. Otherwise also no problem. Directly outer column is okay. If you show the calculations in the bracket, there is no need of wasting time in too many columns here. But just show the calculations. If they are small, just within the bracket. If they are little big, show them in the working notes, but refer to that note number here. For example, rent-free accommodation, note is there. So refer to that working note number, whatever it is. Right, let us say in the bracket, just for example, working note 1, like that. So presentation is important. First, the main answer, then the working notes. So what are the things which are part of the salary, income from salaries? That all has to be taken here. So basic salary 15,000 per month. So naturally 1,80,000 per annum. DA 5,000 per month. Not forming part of retirement benefit, does not matter. That also is taxable. DA is always taxable whether it forms part of retirement benefit or not. Only thing is, it may not be included for the purpose of salary while computing something else. But is it taxable? Of course taxable. Whether it is forming part or not forming part, it will be taxable. 5,000 per month means definitely 60,000 per annum. This can be going in the same sequence given in the question, no problem. Don't worry about segregating things and all. Simply just go with some sequence. No need to segregate, oh, these are all allowances, or these are all perquisites. That much time waste is not required. Simply item by item. Each of them, how much is the amount taxable? Directly take it to the main outer column, and in the bracket, if you show computations, that will be better. For example, in this case, okay, sir, basic salary 15,000, show that 15,000 into 12, right? That is 1,80,000. Like that, DA 5,000 into 12, show that in the bracket. That's enough. So that will be 60,000. That is also taxable. Hostel allowance 1,000 rupees per month. So definitely 12,000 rupees will be also taxable. Why? It does not have any child. Means zero exemption. Entire amount will be taxable. That is hostel allowance 12,000. Like that. Tiffin allowance 500 rupees per month. Definitely will be fully taxable. There is no exemption for that at all. It is a fully taxable allowance. Transport allowance also fully taxable. That is 2,400. Again, I am telling you, this segregation or separate classification of allowances, taking the total of allowances, this is not required. This is shown in this case. Presentation can vary from person to person. That's not a problem. But we have to get the best possible presentation with the least time. We cannot afford a lot of waste of time classifying allowances separately and perquisites separately. Not required. This is not required. Just go with the sequence given in the question. That's all. Item, whatever the particulars are, how much is taxable. That's it. So here, 1,80,000, 60,000, 12,000 taxable. Then tiffin allowance, entire amount will be taxable, that is 6,000. Transport allowance 2,400 will be taxable. Bonus, of course, will be taxable, that is also 20,000 rupees per annum. So this is done. Commission also 15,000 rupees per annum will be taxable. Whatever name it is called, all are taxable. Free refreshment in office worth 5,000 rupees is not taxable. So what you should do? You should say nil, but you should write the item free refreshments in office. Amount is nil in the amount column. Then you should write a note simply telling free refreshment provided by the employer to the employee during office hours is not taxable perquisite. Simple, one line, no stories. Same way, mobile facility given by employer also not taxable. Computer facility given by employer also not taxable. You don't need to write 3 notes and waste time. You can just write them here, nil, nil, nil. But you can write only one note describing all of them. Free refreshments in office, mobile phone provided by the employer, computer facility are not taxable perquisites. So all of them, there will be no taxability, nil, nil, nil. Okay. These are the various items which are taxable so far. But now the main calculation comes. She has been provided a rent-free accommodation owned by the employer in Kolkata. So if the accommodation is owned by the employer, we have to look at the population of the city. Kolkata definitely is a big, huge city, so definitely more than 25 lakhs population, which means 15% of salary should be taken as value of rent-free accommodation. So 15% of what? Salary should be taken. For that purpose, what is salary? We definitely have to compute that also. And look at the other things here. The house was allotted to her with effect from 1/5/2020, but she could occupy it only from 1/6/2020. So this doubt comes: should we start taking the calculation from 1st May or 1st June? No, not from 1st May. When she occupied, from that time only calculation should start. It should be taken. 1st June means how many months she would have occupied the house in this Kolkata? April and May, definitely she did not occupy. So 10 months she has occupied. So whatever the salary that we calculate here, it has to be taken proportionately only for 10 months, not for entire 12 months. For this, we can take 15,000 into 10, 5,000 into 10. Okay, that is not going to be included because it is not forming part of retirement benefits. Like hostel allowance 10, like that you can take. But what is the use? Ultimately, when you already have the numbers, why to do again the same calculation and waste time? So instead of that, simply you can take whatever the totals already there, which are part of this definition of salary, then take it 10, multiply that with 10 divided by 12. That is easier, so that you can save some time. So what is the purpose? What is salary here? What are all part of salary here? Basic salary definitely yes. Bonus definitely yes. Commission definitely yes. In case of allowances, dearness allowance is not included. Why? Because it is not forming part of retirement benefits, very clearly given, so not to be included. And other things we already know, hostel allowance is there, 12,000. Then tiffin allowance is taxable, transport allowance is taxable. So simply take all the total of this, 2,35,400. But is it the salary? Completely no. This 2,35,400 is for 12 months. We have to take for only 10 months into 10 by 12. So how much will be salary for the period of occupation of accommodation by the employee? That will be around 1,96,167, whatever it is. On that 15% should be taken, right? That means final answer will be 29,425. That's what is the value of perquisite here. That is the rent-free accommodation. This has to be done separately in the working note. Then it should be included here, 29,425. Then what you get is gross salary. Since what is asked is gross salary, there is no need to give standard deduction in this particular problem. Depending upon the question, our answer should be. That's it. That is question number 2. So 10 months only should be taken as salary is an important point to be noted. Also, the date from which we have to start the computation of this is the date when the accommodation is occupied by the employee, not when the house was allotted. So from 1/5/2020 we should not take, from 1/6/2020 only we should consider. That's it. That is question number 2. Again, main focus there also is on rent-free accommodation valuation. Question number 3 also, some students have some doubt or concern. but it should not have been there. Why? Because the provisions, if you are clear, there is no confusion. When you are clear with the provisions, everything is normally done simply. So what is the point here? Only new thing here is this SSC Kushi was allotted houses at two different places. Then what to do with that? For that we should know the provision. When the same employee is allotted two different houses up to a period of 90 days, which means 3 months approximately, one house only will be valued as perquisite, one house will be exempt. So when the employee is transferred from one place to another place, two houses are there at the same time, then up to a period of 3 months or 90 days, one of the houses only will be taxable perquisite. Which one? That the law did not tell. So naturally, which one we have to take? Which is better for the SSC? Whichever is lower value, that only we will take. When the law is silent, always we have to give benefit to the SSC. So one of them only will be valuable and taxable as perquisite. After 3 months, what? Both the houses will be taxable. This is the provision we should know for solving this question. Remaining things are different. Now the question is about gross taxable salary once again. So start with basic salary. Those are all same. 6,000 per month means 72,000 per annum. That is basic salary. Then DA 3,000 per month. Is there the DA? Immediately we have to look at whether it is part of the salary or not. That has to be taken. Of course, for computing the taxable salary, it is anyway taxable. So definitely this 36,000 is going to be included in the gross taxable salary. That is for sure. But for the purpose of valuation of accommodation, we should know whether it is forming part or not forming part. Let us see that later. Now academic development allowance 1,000 per month, in that 700 is incurred as expenditure. That means 300 is taxable since it is academic allowance, education for the purpose of employee himself. So to the extent of expenditure, it is exempt. It is forming part of that kind of category of allowances. So 300 will be taxable, means 3,600 will be taxable. That's it. These are the various things. Entertainment allowance is always taxable, fully taxable. So 6,000 rupees is taxable. These are all included as part of allowances. Fine. Now the main point comes about perquisite. Look at the details. She has been provided with a rent-free accommodation wherever it is, Purulia, whatever it is, doesn't matter. Don't worry about it. If it is relevant, then only we should worry. Otherwise, it's not. On 1/7/2020, not from the beginning of the year, only on 1st July, she was provided with. She was provided with rent-free accommodation in Purulia. Then this is a full stop. On 1/7/2020, she was posted to Kolkata. That means April, May, and June. She was in Purulia. 3 months. 3 months she was in Purulia, and then from July onwards she was posted to Kolkata. So 1st July onwards. A new house further allotted to her on the same date, means 1st July only. But she surrendered the Purulia house only on 31st December 2020. Can she do that? Of course she can do anything. That is between employer and employee. But what is our problem? In this period of July, August, September, October, November, December, in this period, 3 months, out of the two houses, one house only will be taxable. After that, both the houses will be taxable. As simple as that. So we have to divide the total year into multiple periods. That is the main point here, right? And how to divide that? First 3 months, only Purulia house will be taxable. Then July, August, September. July, August, September, one of them. Which one we don't know. We have to calculate that. For those 3 months, whichever one is lower, that will be taxable, right? For those 3 months. Then which 3 months? July, August, September, 3 months. Then October, November, December, another 3 months. Another 3 months, both houses will be taxable because she has not surrendered the Purulia house till December. So October, November, December, both houses will be taxable. Then the last 3 months, which is January, February, March, only Kolkata house will be taxable. That's it. This is the main point here to be noted. And once we know that, what is the value that can be done? For that purpose, rent paid by employer for the Purulia house is 500 rupees per month, he said. So what will be that? 15% of salary or rent paid whichever is lower. For this purpose, when the house is not owned by the employer, then population of the city doesn't matter. So Purulia, whatever the city it is, I don't know where Purulia is, all these things are irrelevant. Doesn't matter. Because 15% of salary or rent paid by the employer, whichever is lower, will be taken as the value of perquisite. Then the Kolkata house is owned by the employer. Kolkata once again definitely is going to have a population of more than 25 lakhs. So naturally, simply straight away, 15% of salary will be taken for the purpose of this Kolkata. So how to take the valuation of perquisite in this case? That is a crucial point which is given here. So let us take the different periods. So April, May, June, only one house. 15% of salary or rent paid, whichever is lower. So what is salary for this purpose? Once again, what is salary for this purpose? That has to be calculated, basic to be included. DA included here with what assumption? You have to clearly write that assumption. Since it is not clearly given in the question, you have to assume that the DA is forming part of retirement benefits. If nothing is given, you can assume anyway, but better to assume as forming part of retirement benefits. Then entertainment allowance will be included since it is taxable. Academic development allowance, to the extent it is taxable, will be included. So 1,17,600 is the amount of salary for the purpose of valuation of rent-free accommodation. So 1,17,600, once you have calculated that, for the first 3 months, proportionately you have to take. So 1,17,600 into 15% into 3 by 12, only 3 months, or which is coming to how much? 4,410. Or rent paid by employer, which is 500 per month. 500 per month into 3 months, only 1,500. So whichever is lower has to be taken. So when we have to take whichever is lower. 1,500 is lower. So 1,500 is the amount to be considered as taxable. That is first 3 months. Next 3 months, one of them will be taken. One of them. Which one? Whichever is having lower, definitely. So in the first case, the 1,500 is lower, as we already know. In the second case, Kolkata house, 4,410 is 4,410 is 15% of salary, which is lower in this. 1,500 is lower. So that has to be taken, which is beneficial to the SEC. So 4,410, this is exempt, we can say. When the employee is transferred from one place to another place and he is provided accommodation at both the places, one of such houses only will be taxable for a period of 90 days. So 90 days is what the law said. We can interpret it as 3 months, not a problem. So don't go into the number of days and all that here. Not required that much details. Simply 90 days is 3 months. So that is next 3 months. After that next 3 months, both will be there. Both. So 1,500 plus 4,410. That total will be 5,910. Then the last 3 months, only Kolkata house, 4,410, as we already know, that will be taken. So total of all this is 13,320. That is included here. Then the total gross taxable salary will be 1,30,920. That is rent-free accommodation computation, taking the entire year into splitting it into different periods according to the provisions, according to the information given in the question. This classification of the or splitting of the year into different parts and calculating for each part separately is the only crucial thing in that question number 3. So question number 2 and question number 3 definitely are focusing on the rent-free accommodation. Okay. Then question number 4 is also starting with that only. Ashutosh is provided with a furnished accommodation in a city having a population of 14 lakhs as per last census. Municipal value of the house, irrelevant. Fair rent, irrelevant. All this unnecessary information. But salary details definitely are important. So basic is given. Allowances for increased cost of living, whatever it is, names or whatever, that is nothing but DA. Basically, if you understand that in the context of what is that kind of allowance. But even then, we don't have to name it. Whatever is given in the question, that can be taken. But that is taxable for sure. Any allowance is taxable. Children education allowance, 3,000 per month. He has 1 son and 2 married daughters. That doesn't matter. 2 children will get exemption. That means definitely 200 per month will be exempt. Remaining amount will be automatically taxable. What is the requirement of the question? Always your focus should be on that. Gross taxable salary once again. That is the requirement of the question. So 25,000 per month. That is anyway to be included, which comes to 3 lakhs rupees, right? Then next one, allowance for increased cost of living, nothing but DA. Whatever it is, anyway doesn't matter, it is taxable, that is 60,000. Then children education allowance, 3,000 per month is given, but as we know, for 2 children only, it is 200 only will be exempt. That means how much will be taxable? 2,800 will be taxable. Multiply with 12, that comes to 33,600. That is a taxable children education allowance. That's all. And what else is there? In addition to that, accommodation is there. And then add furniture value also to that. Both of them can be done separately. First thing first, accommodation. For accommodation, what is salary here? For this purpose of valuation of rent-free accommodation, what is salary? All are included because basic salary is included. DA, though it is not given whether it is forming part of retirement benefits or not, we can assume it is forming part, so included. Taxable portion of children education allowance is included, so salary here is 393,600. Once you have that, 15% of salary will be the value of, 10% of salary in this case. Which city it is? The population of the city is 14 lakhs. It's not Calcutta, Mumbai or anything. So clearly given which city we don't care, but since it is 14 lakhs population, 10% of salary will be the taxable value of perquisite. So 10% of salary is 39,360. Then value of furniture. Furniture, if it is hired by the employer, actual hire charges. If it is owned by employer, then just 10% of that cost, original cost, has to be taken. So simply speaking, though you can take different items, as far as TV is concerned, 2,000 directly will be taken. Other furniture, 1,000 per month means total per annum 12,000. So total of this is 14,000 clear. Keep it aside. And this one, 10,000, 5,000, 20,000, total 35,000. On that 10% means 3,500. That's it. So total value of this furniture is going to be how much? 17,500. That can be shown in the working note. Total of that is 56,860. So what the name we have to write here? 56,860 is the value of furnished accommodation. 39,360 is the perquisite value of rent-free unfurnished accommodation. So clearly you should write that. 39,360 is different, 56,860 is different. So since you are taking it total, 56,860 is the perquisite value of rent-free furnished accommodation. That is what this amount is talking about, which is 56,860. Okay. After adding that, the gross taxable salary is 4,50,460. That's all. So again, main focus is on valuation of perquisite in the form of rent-free accommodation. Fifth question is about ESOP, employee stock option plan. Here, lot of dates are given. Most of them are irrelevant. When the company grants the option, what is this vesting period? All these things are irrelevant. What is important here is, what is the date of allotment and what is the date of exercising the option. Main point here to be noted is, taxability of this perquisite arises on the date of allotment. Without getting the shares allotted, there is no taxability. So what is the date of allotment? 3rd April 2020, which means definitely this perquisite is taxable in the previous year 2021. That means assessment year 21-22. Though exercise happened on 31st March 2020, since the allotment happened on 3rd April, allotment is the taxable event when this perquisite is taxable. But for valuation, we have to remember the provision once again. In that provision, what was clearly given is, the fair market value on the date of exercise of option minus amount that is charged by employer shall be the value of perquisite. So what is the fair market value on 31st March 2020? 440 rupees per share. What is the amount that is actually paid by the SSE? That is given 50 rupees per share. That means 390 rupees per share will be taxable. Like that 100 shares. That means 39,000 rupees is the value of perquisite. So only key point here is date of allotment is the taxable event, no doubt. But still, valuation of perquisite will happen in accordance with the fair market value of the shares on the date of exercise of option. So that is the only key point here to be noted in question number 5. Then question number 6 is about car perquisite, which is straightforward. Sonam has been provided a car 1.7 liter engine by his employer, whoever it is, Vikash Limited. The cost of the car to the company was 3,50,000 rupees and maintenance cost incurred by employer is 30,000 rupees per annum. Chauffeur salary paid by employer is 3,000 rupees per month. Chauffeur means driver. Find value of the perquisite for the assessment year 21-22 if the car is used for office purpose, completely personal purposes, for both the purposes. And in case of B and C only, the employee is being charged 15,000 rupees per annum for such facility. Simple direct point. If the car is used for office purposes, there is no perquisite at all. That is nil. Nothing is perquisite since it is used for office purpose. So first A bit, no perquisite at all. Nothing to be calculated. For B, personal purposes means there is no law specific amounts. Actual amounts only will matter. What are the actual amounts? Car 3,50,000 rupees. 10% of that will be taken. That is 35,000 plus actual amounts of expenditure incurred by the employer. So 30,000 rupees per annum, that is maintenance cost, and 36,000 rupees per annum for the driver. All these three are added. So total is 1,01,000. But since the employee is paying 15,000 rupees, that will be deducted. So 86,000 rupees is the taxable value of perquisite. That is B case, where entirely the car is used for personal purposes, which is based on actual expenditure incurred by the employer, whatever it is, how much our amount it is. But for the car itself, like any other movable asset, 10% of the cost of the car will be considered as value of perquisite. So 35,000 plus 30,000 plus 36,000 is the total. But since 15,000 is taken by the employer from employee, that will be deducted. So actual perquisite value is 86,000 only in second case. Third case, if it is used for both purposes, both means official as well as personal. In that case, actual amounts do not matter. Straight away, whatever the law prescribes, that has to be taken into consideration. And the capacity of the car is here 1.7 liter. So definitely 2,400 per month will be taken as value of perquisite for car itself. Driver is provided. How much salary, actuals and all we don't need. Law said 900 rupees per month driver facility. So simply 3,300 rupees per month is the value of perquisite. So total amount is 39,600 is the value of perquisite. Point here to be noted, very important point. Lot of times people do mistake is when we are taking statutory values, which means the law specified values, whatever it is, whether it is 1,800 or 2,400 or 600 or 900, as the case may be, wherever it is, we should take those values as taxable directly. No amount which is paid by employee shall be subtracted. No subtraction of actual amount paid by employee to the employer shall be done. So that is a very important point. Straight away value of perquisite is whatever the law said. Law said 2,400 per month for the car, 900 per month for the driver. That's all. So 3,300 multiplied with 12. 39,600 is the value of perquisite in that case. Straightforward. That is question number 6. Question number 7 has multiple cars. This is also important type of provision where multiple cars are provided. That is an important point to be noted. Here, 3 cars are provided. All the cars are owned by employer. But look at the car A and car B. Office as well as personal purposes. Both of them are used for both purposes. Can we take both of them as both? No. Only one of them shall be taken as used for both purposes. One of them should be considered to be as good as completely used for personal purposes. It has to be assumed to be used completely for personal purposes. Car C is straightforward since it is used completely for personal purposes. Straight away, we can consider the value of that. Cost of the car is 2 lakhs means 20,000. Maintenance expenditure incurred is 40,000 means total 60,000. Car C is the easiest one. Straight away, this car C will have the overall amount to be 60,000. Sorry, sir. This is incurred by employee, not employer. So that is not at all a perquisite. Employee, his own expenditure he is incurring. How does it matter? Employer is not incurring anything. So no 40,000 to be taken. So simply 10% of the value of the car, which means 20,000. That's it. So for car C, straight away, in all cases, whatever it is going to be 20,000 only. But here, for car A and B, we need to take whichever is the better option to the employee. What are the two options here? One, car A is considered to be both purposes. B is assumed to be for only personal purposes. That is option 1. Option 2, car A is used for personal purposes, assumption only. That car B is used for both purposes. Then how the valuation will be? Let us take option 1 first. A is used for office as well as personal purposes. So if that is the case, law specified amount has to be taken. And what is the capacity of the car? 1.8 liters. So naturally we have to take 2,400 rupees per month, which means 28,800 rupees is the value for car A, which is considered or deemed to be used for both purposes. In this option, B is deemed to be used for personal purposes. So we have to take the actual calculations. Cost of the car 5 lakhs means 50,000 should be taken. That is 50,000. Then the expenditure incurred by employer 60,000. So 10% of 5 lakhs 50,000 plus 60,000 means 1 lakh 10,000 is taken as value of perquisite in this case. So if this option is chosen, all the three put together are giving a total value of perquisite of 1,58,800. That is option 1. Now taking option 2. In this case, A is deemed to be used for personal purposes. B is deemed to be used for both purposes. When B is deemed to be used for both purposes, we have to look at B's capacity, 1.4 liter only. That means only 1,800 rupees per month, which means 21,600 is the value of car B. Then for A, since it is deemed to be used for personal purposes, it has to be taken on the basis of actuals. Actuals for A are what? 30,000 plus 50,000, 80,000 will be taken. So now in this case, adding the three different amounts, total of the perquisite is coming to be 1,21,600. So which is beneficial to the SSC? Option 2 is beneficial to the SSC. Option 1 is not. So final conclusion should be SSC shall opt car B to be used for both purposes and car A is assumed to be or deemed to be used for purely personal purposes. When he has multiple cars which are considered to be or actually used for both purposes, for the law or for the computation of value of perquisite, we cannot take both the cars or multiple cars as used for both purposes. Only one such car can be taken as being used for both purposes. All other cars should be deemed to be used for personal purposes. So conclusion here is B should be taken as used for both purposes. A should be taken as used for personal purposes completely. That's it. That is question number 7. Now question number 8, straightforward question. Bhagwan has been provided with the following servants by his employer. The watchman appointed by employer and salary of the servant is given. Look at the other things. Bhagwan also has been provided with rent-free accommodation which is owned by employer. Find taxable value of servant facility only. That accommodation has nothing. That accommodation is different. Servant facility, if he is a specified employee, if he is not a specified employee, two cases are there. Look at watchman, employer himself has appointed. If he is a specified employee, then definitely it will be taxable. If he is not a specified employee, it will not be taxable. If he is a specified employee, then only it will be taxable since the appointment happened by employer. Cook, appointed by employee's wife. 3,000 per month, who is paying? Employer is paying. So obligation of employee met by employer. This is not required to be checking. We don't have to check whether the employee is a specified employee or not. So it is taxable in all cases. So 36,000 is taxable in both the cases. Maid servant appointed by employer once again. So when it is appointed by employer, definitely it is taxable only for specified employee. So 12,000 is taxable for specified employee. Nothing is taxable for non-specified employee. Sweeper. Sweeper employee appointed. So automatically taxable in all cases. That's a kind of reimbursement which is taxable in all cases. Obligation of employee met by employer types. So 6,000 is taxable in both cases, whether the employee is specified or not. Look at another point here. This is another important point. Gardener, if an accommodation, rent-free accommodation is provided to the employee, which is owned by employer, gardener facility, which is provided, is not going to be taxable. So, even for specified employee, it is not taxable. For non-specified employee, anyway, it is not taxable, since the appointment happened by employer. So, that is another point to be noted. Gardener facility given by employer to the employee, where already a rent-free accommodation is given by employer to the employee, which has to be owned by employer, then gardener facility separately is not taxable. That is given in a separate circular, though that is not there in the law. There is a circular of CBDT which clarifies that gardener facility provided by employer, whereas already there is a rent-free accommodation provided by him, which is owned by employer, then gardener facility will not be separately taxable. So what is the logic of that is, the value of rent-free accommodation itself is assumed to be, deemed to be already inclusive of this gardener facility. That's only an assumption for understanding the intent of the circular, intent of the law. But doesn't matter when the law says, by the way, circulars are also part of the law. We know that. Act, circulars, legal judgments, all of them are part of the law. So, according to that circular, basically, gardener facility is not taxable if already there is a rent-free accommodation owned by employer is provided to the employee. That's the important point in this case. All remaining things are straightforward. So, keeping that in mind, total of the value of perquisite in case of specified employee is 78,000. In case of non-specified employee, it is 42,000. That's the question number 8. Perquisites once again. Then, question number 9 involves a lot of calculations. It is a transfer of movable properties. In case of transfer of movable properties, we need to take the depreciation that is given by law. Point to be noted here. A lot of people do mistake, though it is not given in this question. In some cases, it will be given in the question. What is the depreciation rate used by employer for his books of accounts? We don't care. Whatever the depreciation rate specified by law, that too for this purpose only, have to be taken into consideration. So computer is there separately, car, television and sofa set are there. So looking at each of them one by one. What is the WDV of the computer according to the Income Tax Act? For this purpose only, once again I am repeating, this depreciation percentages should not be used in PGBP at all. Are we talking about the real depreciation rates for the businessman who is employer here? No. We are not at all worried about that. We are only talking about salaries. We are only talking about valuation of perquisite. What will be the valuation of perquisite? Whatever the written down value is according to the law, then what is the real amount that is paid by employee to the employer? Difference of these two will be the value of taxable perquisite. So let us look at one by one. What is the rate prescribed for computers? 50% WDV method. So 50% WDV method, if you take whatever the starting point when the computer was originally purchased by employer 1/7/2017. So for that particular period, 50%. We have to understand, we are not having any financial year point here. For each completed year of usage, depreciation is being provided. Again, this is not a normal accounting depreciation. This is only and only for the purpose of this calculation. Other than that, it has no relevance anywhere else. Keep that in mind. So this depreciation will be from 1/7/2017 to next year 30th June 2018, 50%. After that, WDV will be 1 lakh. Another 50,000 is deducted on WDV. So WDV on 1/7/2019 will be 50,000. On that, another 50,000 is there, which is up to 30th June 2020. So after that, what is the WDV of this particular computer? 25,000 on 1/7/2020. For the period, should not take any proportionate amounts. Date here is 18th August 2020. Don't apply your accounting knowledge here. Nothing like that has to be done. For the period of 1/7/2020 to 18th August 2020, nothing should be taken because it is not even a completed year. So this is irrelevant. Only 25,000 is the WDV for this purpose of valuation of perquisite according to Income Tax Act. But this is sold for 20,000 only, so the value of perquisite will be 5,000. That's it. That is for computer. Same way for car. For car, date is given, date of purchase is 2018. So from that date, for each year, completed year, that has to be taken 20%. Once again on WDV basis, 20% on WDV for car. So purchase price, 20% on that. WDV is 240,000. On that 20%, 48,000. So on 1/4/2020, the WDV is 1,92,000. Once again, proportionate amounts should not be taken. This depreciation to be calculated only for completed year of usage. Very clearly. For 1,92,000 worth of car, the employee paid only 50,000, which means 1,42,000 is the value of perquisite. Like that. For any other asset, straight line method depreciation has to be done at the rate of 10% for each year. So how many years have passed, that you can calculate. When this asset was originally purchased, 1/4/2015. So from 15/16, 16/17, 17/18, 18/19, 19/20, right? Up to 31st March 2020, 5 years have passed. So 5 years, 10% means 5,000. For 5 years, the depreciation is 25,000, straight line method. So what is going to be the written down value on the date of sale is 25,000. But that is sold at what amount? Only for 2,000. So naturally remaining amount 23,000 is going to be the value of taxable perquisite. Then what about sofa set? Look at the dates carefully. Sofa set was purchased in 2005, long back. Purchase value is 80,000. Okay. Now date of sale is 1/7/2020. So up to 31st March 2020, how many years would have been passed? Easily 15 years has passed. So 10% each year, 8,000, 8,000 if you deduct. Okay, like that in 10 years, this asset will be fully depreciated. That means what will be the value of this? Zero. So there is no WDV for this asset at all, old one. So zero valued asset, whatever the amount collected from employee, that doesn't matter. Don't take negative value of perquisite and all. So this 5,000 is irrelevant since this value is nil. Finally, the value of perquisite is also nil. So the total of all this is going to be 1,70,000. That is the question number 9. Transfer of mobile assets. For computers, 50% WDV method depreciation to be taken. For cars, 20% WDV method. For any other asset, 10% straight line method. That's all. Like that, question number 9 is to be solved. Then question number 10 is about medical perquisite. In case of medical perquisite, stay expenses, actual expenses are 70,000, permitted by RBI is only 45. 70,000 actual expenses, 50,000 is only permitted by RBI. But in reality, amounts permitted by RBI are too huge. Now recently we have something called LRS scheme, liberalized remittance scheme. According to that, up to $250,000, there is no permission of RBI at all. Anybody can just send any amount from India to outside India. So this is just for application of provision. These amounts are there. In reality, these are just very small amounts, irrelevant amounts actually. Nothing will be called as not permitted by RBI. In reality, there is no need of permission from RBI at all. Up to $250,000, which is a huge amount. So forget about those realities. In this question, whatever is given, how much is taxable? Naturally, the amount which is not permitted by RBI will be taxable. So in the case 70,000, 50,000 means here 20,000 is taxable. Here 70,000, 45,000 means 25,000 is taxable. So that is about stay and medical expenses. When it comes to travel expenses, another problem will come, because travel expenses are taxable if the gross total income of the employee is more than 2 lakhs, and they are not taxable if the gross total of income of employee is less than 2 lakhs. But what is that gross total income? Before adding this, what is the gross total income that has to be taken before adding traveling expenses? So question comes, should we add stay and medical expenses? Yes. So what is going to be the total of other things here for this person who were the question clearly given, annual income from salary before considering medical perquisite was 1,50,000. So point to be noted here, income from salary, we have to assume because given income from salary, it is after standard deduction only. Don't give standard deduction separately. When it is given income from salary, is not given as just salary, or it is not given as just basic or something like that. So we are not calculating any salary here. It's already given, computed after standard deduction. It is 1,40,000, 1,50,000. But these are not included. Medical perquisite is completely not included so far. But 45,000 should be included, which means 1,95,000 rupees will be the salary income of this person. But the provision said gross total income, not salary income. But we don't know any details about other incomes. So we have to assume he has no other incomes. We have to, no option. So 1,95,000 in this case, same 45,000 if you add, 2,45,000 in this case will be the gross total income of this person. So in the first case, this entire 1,15,000 will not be taxable. In the second case, it will be taxable. So that is the main point here. But 45,000 is common in both the cases, 2025, 2025. In the first case, travel expenditure is not taxable since the salary or gross total income, not actually salary, gross total income before adding this medical travel cost is not exceeding 2 lakhs. In the first case, it was 1,95,000 only. So this is completely not taxable. In the second case, since it has exceeded 2 lakhs, that is completely taxable, 1,15,000. So the value of taxable perquisite will be completely different in both the scenarios. That is question number 10 related to medical perquisite. Now, other things like question number 11. Here, X has the following salary structure. Basic is given, DA is given, commission is fixed commission, entertainment allowance is given. He contributes 20,000 rupees to the provident fund. Employer also makes a matching contribution. Compute gross salary of X if he is a government employee and such provident fund is a statutory provident fund. That is case A. Case B, he is an employee of Y Limited and such is a recognized fund. Case C, he is an employee of Z Limited and it is an unrecognized fund. Simple calculations. First of all, basic DA, commission, entertainment allowance, all of them should be included because those are common for all the cases. There is not going to be any difference. So 1,20,000, commission taxable, entertainment allowance, okay, that is taxable. Then DA, of course, also taxable. So this is common. So this 1,20,000 and this commission 2,000. In all three cases, it is same. This total of allowances 36,000. All of them are same, common. Only thing what changes is PF. That's the only difference. In the case of first scenario, since it is a statutory provident fund, employer's contribution is completely exempt. So nothing is taxable. That's all. But in the second case, since the provident fund is a recognized provident fund, up to 12% of salary it is exempt. Beyond that, it will be taxable. Then question comes, sir, what is salary here? Definitely the definition of salary for all cases we have to keep in mind. In this case, same standard definition, basic plus DA forming part of salary plus commission as a percentage of turnover achieved by the employee. But here commission is fixed commission. Should we include these two? No, we should not. But what about these two? Yes, they should be included. So basic, assuming DA is forming part of salary. We have to take some standard assumptions so that we can solve the problems with all same manner rather than changing from problem to problem. In exams, usually it will be very clearly given whether it is forming part of salary or not. So, assuming it is forming part of salary, 11,000 per month is going to be the total amount. So, that will be coming to 1,32,000 rupees per annum. 12% of 1,32,000. 12% of 1,32,000 is how much? 15,840. To that extent only it is exempt. But how much is contribution? Actually 20,000. So how much is taxable? Remaining amount is taxable. That is case B. Case C, keep that in mind very clearly. Unrecognized provident fund is not taxable now. So you don't have to worry what happens later. It will be taxable when the employee withdraws the money from unrecognized provident fund, or if he transfers in future from URPF to RPF, then the full amount will be taxable for the employee in future. But at the time of the contribution, nothing is taxable for unrecognized provident fund. So for case C also, nothing is taxable. So for case A and case C, the gross salary is same. For case B, only computation is there for the extra taxable amount of employer's contribution to recognized provident fund, which is 4160 in this case. That is question number 11. Majorly focusing on the contribution to different types of provident funds. That's it. Then question number 12. Once again, car capacity is 1.5 liter only. Given on 15th July 2020. Date is important also. Cost of the car to employer was 6 lakhs rupees. And maintenance cost incurred by employer is 20,000 per annum. Chauffeur salary paid by employer, whoever it is 4,000 per month. Car is 40% used for office, 60% for personal purposes. This is where people get confused once again. What is the relevance of this? No relevance, unnecessary information. When it is used for both purposes, 40, 60, whichever percentage it is, it does not matter at all, completely. It's partly used for office, partly for personal, that's all. Which means simply we have to take the statutory amount. All the remaining things will not matter. And when you take statutory amount, charges paid by the employee also will not matter. So in this problem, more than the information, actually all information, entire information is irrelevant only. Only what is relevant here is, first thing first, what is the capacity of the car? Second thing, whether driver is provided or not. Remaining all actuals are irrelevant. Straight away, car 1800, since the capacity is 1.5 liter, the amount to be taxable for the purpose of valuation of car is 1800 rupees per month. Like that, how many months? That is another point to be noted. Part of the month should be ignored. So, how many months has to be taken? April, May, June, July. 4 months we have to take out. Since it is given somewhere in the middle of July, July has to be ignored also. Starting from August only, it should be calculated. So, main point here is, part of the month shall be ignored. It shall not be considered for this purpose. So, only 8 months. August, September, October, November, December, January, February, March. 8 months only will be taken. So, 1800 into 8. But driver 900 per month, we know that. Simply 21,600 is the taxable value of perquisite. What about all the information given in the question? All of that is useless. All of that is useless. Simply date is relevant here, so that we know how many months it is used. Capacity is relevant. Whether driver is provided or not is relevant. What is the salary of driver? We don't care. What is the cost of the car? We don't care. How much cost is incurred by employer? Really? We don't care. How much is recovered from employee? Irrelevant. Everything is irrelevant. When the car is used for both official and personal purposes. And what is the percentage of official, percentage of personal also is irrelevant. All of that is irrelevant information. A simple calculation of these two things will give us a perquisite value of 21,600. That is question number 12.